ahead, walk that step. All right, and just do the same ones I told you. All right, I got a 28 and a half. Welcome to SMF Street. I'm bidding in on 1100 put that expires in September. And what I would like to show you is that on the daily chart right here, that these contracts were up here at $100 and that they had a 2190 close. They're at 585, and I've got a haircut right here and right now. I've got a haircut. I'm at a 2850. I'm going to cancel. I'm going to cancel that 2850. I'm going to try to cancel that 2850. There it is. I'm going to come off. There it is. Let's see what's behind the market. I'm going to move it up. I'm going to move it up. That's a 3140. It's $3, almost $3 wide. Here's what I'm going to do, though. I'm going to move it up. I'm going to move it up. I'm going to use one contract to try to move in. I'm going to go 20. See, I created that. He walked that. I'm going to walk up that bid. There it is. But I'm only going to use one contract to try to get this guy to throw off to me. That is a 1100. Okay. Now watch. I can scale him. So basically, I'm going to come off. I'm going to come off that bid. That market maker, he's in control. 28.90 followed me up. I'm going to go to 29.5. I'm going to go to 29.5, but I'm going to just scale it. I'm going to scale it because I'm paying up $8 from yesterday's close, not knowing what the jobs report would be, but I would rather be right on the S&P coming down and getting back below the 20-week moving average. And I got a 29.50. He's at 31.10. I'm going to come off. I'm going to come off. I'm going to come off that 29.50. There he is. He walked up 29.80 up behind me. Now I'm going to go to 29.80. I'm going to see if he'll bite me on one contract right there at $30. I'm going to walk him up. I'm walking him up. There's my $30 bid by 31.10. I'm going to wait there about 3 seconds. Count 1, count 2, and 3, trying to get that wholesale bid. Close at 21.90 up 585. We got a big haircut on the S&P. I'm just trying to scale. I'm going to come off that bid and see if that other market maker's coming up behind me. Right there, 29.80. Okay, let's see if he'll throw off again. I'm going back out at 30. I'm going back out at 30. But I'm just trying to scale it. There, he just hit me on 2 contracts. Right there. So as I was canceling the other, he had already filled me. Now there are the trades, there are the entries on that one there, and we got 2 contracts for now. But remember, we let some other bigger players get in. I'm going to go 2 contracts. And what I'm going to do is I'm going to get back down below the market in case we have an intraday move. And what I'm going to do is I'm going to bid the other 10. I'm going to bid the other 10. I'm going to leave a bid out there all day at 22.5 on 10 on 10. I'm going to buy 10. I got 2 contracts right there. We got it. We got 30. He was 31.30. I'm going to go out here on a bid. Here's my bid right now. There it is. Just so you can see what the bid is. It's significantly away. You can see that bid. That bid is right here, $4,500 on 22.5 bid. That's below the market. So now I'm below the market. S&P 500, $1,100 put that expires next month. Then I'm going to go back and do the other charts. There it is. Hubba hubba. That's how we start scaling in that. We paid up today, and we created a price of the last print was $29.80. And this thing right now, I got to show you now that that is done. This is the call put contract just right over here on 720. Folks, they were 60 some dollars. At least I'm buying $30 below the market because we got deflated. We're coming up. The S&P has got a little problem off the jobs reports. I'm letting bigger accounts take bigger trades. However, I will scale the range just in case there's, a pop. But I can tell you I'm buying down here in that deflated area. Remember, like I said, even the last highs over here on 730, these were $40 a contract then. So I've got 2 contracts at 30. I'm willing to buy, but I'm also going to be a market maker, and I'm also willing to sell to. I'm going to go up above the market. I'm going to go up above this market, and I'm going to put out a limit order, and I'm going to put right here. I'm going to put it out. I'm going to put it out at 39. I'm going to put it out at 39.50 on a sell. just to be up above the market, because that way I'll be in control. We get more selling later in the day. Now he's at 28.90 by 30, 28.90 by 30. I'm below the floor to buy at 22.5. I'm also out to sell to at whoops, wait a second. Let's get here. Let's cancel that. Let's put the 2 orders out to sell. So basically, we're going to sell right here. All right, we're going to have a limit out, up and out, right there. 2 contracts, 39.50. Now, we're above the floor, so if there is any late day selling, and remember, it's $1,100 put, and it's right at S&P 1108. So it's right at the money. But we have waited a number of weeks, folks. These things were popping up here over here back on 7/2. They were $100 per put contract. And I just bought 2 of them. I just saved 7. So on those 2 contracts from where they were, well, actually they were up here at $110, okay, right there. And that was on 7/1. I bought 2 at $30. You do the math. Subtract 30 from 110 equals what? 80 times 2 is $16,000 wholesale that I got. I took out $16,000 buying 2 contracts down there. Okay, on first pass as it's starting to work. And once again, welcome to SMF Street. We are index traders. Go look at our January one. Go look at the April 23rd indexes. See how we have traded these before. But remember, folks, we've been waiting for a number of weeks, particularly even at $60 a contract over here on 720. And today is the uptick with the big down movement. So that's how you get in, and you got to scale it in. That's how we did it.